Namaskar. Hello and welcome to the Banker Se Charcha Finance and Economy Show. I'm your host, Ashish Kapoor. Today, we chat with a distinguished guest on his book, tracing the banking history and the uniqueness of a small little region along the southwest coast of India called South Canara, which has given birth to multiple banking institutions in spite of being miles away from any mega metropolitan centers. It's my absolute privilege to host Amol Agrawal, who's a senior economist, academician, researcher, a voracious writer of op ed articles and blogs under the popular Mostly Economics column. Amol is also an adjunct faculty at Ahmedabad University and a visiting faculty at Meghnad Desai Academy of Economics, as well as the author of the superb book that chronicles the history of private banks in South Canara district from 1906 till the 1969 bank nationalization episode. Welcome to the Banker Se Charcha podcast, Amol.
Thank you, Ashish. Thank you so much.
Right, to give a quick flavor, the brilliantly researched banking book, History of Private Banks in South Canara, is organized in three main essay parts. The first deals with the erstwhile South Canara district's socioeconomic profile and background that led to mushrooming of banks there. The second is about the evolution of dozens of banks here in the Tulu region, some of which got amalgamated in the 20th century itself. Some of them got liquidated, but many others survived till the onset of the current 2020s decade. And finally, the third part compares the private banks of South Canara with similar entrepreneurial banks and nidhis and chit funds that came up in neighboring areas like Malabar, be it Travancore, the Coimbatore region, and the like. To start with, Amol, could you first throw some light on which were the areas, towns, and cities of today that comprise the erstwhile South Canara district, and also a bit about its socio-economic profile that encouraged seeding of so many banking institutions in the days gone by?
Yeah, thank you, Ashish, for having me. First of all, and just responding directly to the question. So this region of South Canara comprises of the major two towns are Bangalore and Udupi, and then you have Kundapur, you have Puttur, and at that time you also had Kasaragod, which is now part of Kerala. As the state reorganization happened, Kasaragod became part of Kerala. It had a higher Malayali speaking population. So these are pretty much the major sort of places in the district. And coming to the socio-economic profile, as any history project, you basically start looking at, what are the population like, what is the literacy like, what is the gender ratio like. So this region is a very cosmopolitan region, not like Mumbai of yesteryears and even today. Because of the coastal region, there was a lot of migration into the region. You have obviously the God Saraswat Brahmins who set up these major banks, the Konkanis, the Saraswat Brahmins, the Muslims, the Christians. It's a very happening cosmopolitan area. As far as the other aspects of the district is concerned, the literacy levels are relatively higher. Obviously, we are talking about a period 1906 to 69, where literacy levels everywhere are low. But when you are looking at South Canara's literacy and comparing it with Madras Presidency and other places, it is reasonably placed. Though again, it's not really looking at 90% or 100% literacy. It's a very lowly number compared to today's times. But when I'm looking at those times, literacy levels are fairly okay. The population growth rates were comparable to Madras Presidency. Then this region has many changes, which I've documented in my book. So it was first part of Canara region, and then it was bifurcated into North Canara and South Canara. And the North Canara became part of Bombay Presidency, and the South Canara became part of Madras Presidency. So there is a lot of geographical changes in the region, which also shapes this place very differently compared to other places. But having said that, this socio-economic profile, when one is trying to document it, there is nothing really very unique about the region which is going to explain to you why so many banks are coming up. Because when I am looking at the general, after looking at the population and all that, when you look at the economic developments and so on and so forth, this region, as you rightly said, it's a remote region. And this region is sort of connected more to Bombay Presidency, but it's made part of Madras Presidency. So, and the Madras Presidency does not pay much attention to its development. So somewhere down the line, there is some kind of a, it's coastal area. The industrialization is not really there. It is not really Bombay where a lot of trading and commerce is happening. It's not a Calcutta. It's not a Madras, which are the three major towns. The British who set these up. Though Mangalore is a port town, and it also is home to many of these South Canara banks. But at the same time, when you look at the trading volumes and you look at other aspects, it's hardly a lot of numbers. And your sort of the last bit of the question, that what explains banking entrepreneurship, I think that it's a combination of many factors. There is the Swadeshi movement which starts taking shape in after Bengal partition, which leads to the first sort of wave of banks which come up in India generally. And you have these very prominent individuals in South Canara who are educated and so on and so forth, and they understand that the one way to contribute to the nationalist movement is by setting up banks. So you start setting up these banks. And then the second wave comes once Gandhi comes in, once Mahatma Gandhi comes into the picture. And we also see, Union Bank and several other banks which are set up, which are deeply inspired by the Gandhian movement. So that leads to these banks being set up. Now, but setting up banks is one thing. How do you sort of run them in a very difficult time for banking? Because this was not really a Mumbai or a Delhi or Mumbai or a Calcutta or a Madras. So that's what I document about these strategies and the way they go about doing inclusive banking and all that. And we can answer that in the subsequent questions.
Absolutely fantastic. As you mentioned, now South Canara's regions, the contribution to the country has been immense across actually various sectors. For instance, culture and cuisine. The most visible manifestation, obviously, being the Udupi tiffin restaurants that dot the landscape of various cities in India. Yet, South Canara's contribution to growth of Indian banking has been equally staggering. I remember your book mentions that no less than 22 banks germinated here, and I believe 5 or 6 large banks among them survived right up till this decade, up till the 1st April 2020 public sector bank mergers. So can you elaborate more on the contribution of the district to the Indian banking per se, as distinct from other institutions that, as you said, started mainly from the metropolitan centers?
Yes, absolutely. I think that's what really attracted me to this topic because, when I also spent some time working in Mumbai in the financial industry, and I would come across these names like Kamath, Spice, Shinoy's, and back in the memory lane, they used to tell me, some of my friends would tell me that we come from this region, Mangalore, Udupi region, where a lot of these banks came up, but it never really struck me and that what's so distinct about it. And I want to pay tribute to Dr. N.K. Thingalaya, whose work really inspired me to take this, because Dr. Thingalaya was a chief economist of Syndicate Bank. The vision of these bankers tells you that in 1960s, T.A. Pai went to Bombay University and recruited this economist who was a young PhD at that time. And Dr. Thingalaya's work has led to my own work, because I was deeply inspired by all this documentation which he did, and I kind of built it on. So, when one is looking at the kind of contribution of the South Canara to the region, just to highlight, as you mentioned, the large banks. So there were 22 banks which emerged in this region, of which 4 went on to become national level banks, and one of them is still a regional bank, Karnataka Bank,
right.
And the other 17 banks were basically merged by all the other South Canara banks, which is also very unique, which I will just explain in the due course. So what is happening is that, and when we put it in this context, so what is the big deal if 4 big banks have come up? So when you look at the nationalized banks, and that's where I stop my story. So the nationalized banks are the largest private banks. The first wave of nationalization in 69, and the second wave is in 1980. So you have 14 in 69, 14 banks have been nationalized in 69, and 6 banks have been nationalized. 20 banks are nationalized. So these are 20 largest private banks. So when you look at the geographies, where do these banks come from? So you see 4 from Bombay, you see 3 from Calcutta, you see 2 from Madras, and the 4 from Bombay, the Bank of India set up by the Sassoon family, the Central Bank of India by the forgetting the name by a prominent Parsi, and then it was ably funded by the Tatas, because one of the Tata banks. So it was prominent communities. So in all this historiography of geography of banks, if I am saying four banks came from South Canara,
Hmm.
right? So which is equivalent to Bombay-based banks, more than Calcutta,
Yes.
More than Madras, which was part of Madras Presidency, right? And in the Madras, two banks are Indian Bank, Indian Overseas Bank, which were both ably supported by the Chettiar capital. So this is a very different kind of a system which is emerging out. And when you kind of look at the data deeply and you look at the strategies, what you realize is that all the other banks, and globally also, when you see London, New York, all these big banks which emerge out, they emerge from these big centers or they go to
Right.
these big centers and they grow. But in this case, you see that South Canara, which is a remote area, and then when you dig deeper, that what is it that was driving their growth, you realize that they was doing inclusive banking. They came up with a lot of products, which we are going to review in the subsequent questions. So their contributions is immense to Indian banking in terms of the way they shaped Indian banks, the way they thought about banking. It was very, very different from typically the way large banks grow in different places. The large banking plate is very similar, that you have these big merchants which set up these banks, big business folks which set up these banks. And typically it's the big businesses which are banking with these entities. So as a result, the bank grows big. But in
Right.
this case, you have a lot of small accounts, a lot of small people, small businesses,
Hmm.
and they had a very interesting template of private banking doing inclusive banking before nationalization. And before after nationalization, obviously we are making the claim that Indira Gandhi nationalized banks because she thought that all these other banks which are running, they were basically catering to the large industry and to the sort of urban areas, not really to the rural areas. So you push nationalization, but the South Canara banks were basically doing everything which Indira Gandhi, and we've been trying to do even after Indira Gandhi's many years of financial inclusion. And each
Yeah.
time we are doing this inclusion, we hear these things that inclusion is not profitable. Inclusion is not, you can't grow with inclusion. But the South Canara banks showed you completely a different story, that you can grow, you can be large banks, because their business strategies were completely for the small customer, small businesses, and they thought through these ideas
Right.
of banking, which really shines in their achievements and what they did.
Yeah, that sounds very fascinating. Please talk us through some of the initiatives and measures that you mentioned South Canara headquartered banks introduced to encourage savings habit across the, let's say, the social divide.
Right. So my book majorly focuses on Syndicate Bank, though I've looked at all the 22 banks from whatever records I could get, because Syndicate Bank, again, there's the history, because Dr. Thingalaya was from Syndicate Bank, and the pies were very apart from recruiting a very able, distinguished individual named Dr. Thingalaya as an economist. They also
Right.
set up a printing press in the
Ah,
1940s,
right.
and that printing press, they set it up because they wanted to share all this banking information. So there's much more on Syndicate Bank compared to other South Canara banks. So
Corporation
if
Bank.
you look at Syndicate Bank strategies, uh, they were the pies who set it up. Upendra Pai, he was a Gandhian, and he was deeply influenced by Gandhian philosophy. He just sets up this bank, but he's a more spiritual person. He's not very interested. His brother, Dr. TMA Pai, who is the second person who helps him in the bank. Dr. TMA Pai is his doctor, medical guy, who's been trained, and he wants to go abroad, but his mother tells him that you've got to serve the region. So he's set to hang around the region. Now, as he's sort of hanging around the region, he's realizing that people don't have enough savings even for the basic medical you know basic medical emergency or even a medical treatment. So then he's sort of thinking that, okay, what do I need to do? I mean, I have this bank. I understand banks are supposed to do this. So what can I do to serve these people so that they start saving? So that's the first idea he has in mind. And he's very deeply affected. And as a doctor, he's, as you say, that a local doctor is a very good economist or an anthropologist. He really knows the region in and out because everybody's consulting the person. So he realizes that people do have some savings, but there are no avenues for them to save. So he sets up something called the pygmy deposits. The pygmy deposits idea was that you will have these door-to-door deposit collectors who are going to collect even the tiniest amount people are saving on everyday basis. So these door-to-door deposit collectors will go to this guy. He or she could be a fisher woman. She could be a cobbler. She could be doing very small tasks. That was not what he was concerned with. He just wanted to make sure that these deposits are taken from these people, and it's unlikely that they will ever visit the branch. So this money started coming in. And what's also interesting is that the interest rate on these deposits was about 3.5%. And when you look at Indian banking at that time, most of these money lenders or these banks which are setting up, they are raising these deposits at 10, 11, 12%. So it's automatically a very interesting business strategy as well, that you're paying a much lower interest on deposits, which means that your loans costs are also going to be lower. Loan interest rates also going to be lower, right? So, and then you run this experiment, and this pygmy deposits for 7 years. The 7 years, if you're collecting a few annas, 7% interest rate gives you about 350 rupees, 360 rupees. And when people started getting that money in their hands, they fainted. They didn't know what to do because they had never seen this kind of money. And several people built pygmy houses. So that was the first major innovation they did, is to look at door-to-door deposit collectors, because they understood that people are not going to come to the bank. But it ended up turning out to be a brilliant business strategy as well, because your interest costs were much lower. The second kind of innovation they did is that they started recruiting local people. They didn't have any big folks. They didn't look for big educational qualifications, and trained these people. Their main purpose was that, people may not have collateral, which is obviously, even today, it's a big problem, that how do you give. So the collateral here was the social media, the social linkages all these people had with each other. So you recruit a person who is deeply connected to the region. That person knows how that whether that person can pay back and all that. Then all their loans were catered to the small businesses, small person. You could they were okay giving very tiny loan amounts, because they were catering to very tiny deposits. So the tiny amounts were also very the loan amounts. Then the way they set up branches, that's also very interesting, because you realize that in a South Canara kind of a setting, firstly, you have to keep your costs low. Secondly, you got to set up trust and reputation. So they set up these branches initially in the homes of a prominent individual, in the homes of a prominent person in that locality. And since most of these people are known to TMFI, so you were, setting these things up, an early model of bank assurance, and all these things we've been trying. And then they lend out majorly to agriculture sector, which nobody was doing at that time. And what's also very amusing is that Syndicate Bank comes up in 1920s, 1925, and 1935 is when Reserve Bank of India comes in. And when Reserve Bank of India starts to regulate and starts to figure out, Reserve Bank of India is not very amused with syndicate bank strategies, and they get into a lot of tiffs. That, why do you have door-to-door deposit collectors? What is this pygmy deposits? You don't have any prominent person in your board. These are all local people. We don't know any of them. So lots of issues, around inclusive banking and all that, because at that time, Reserve Bank of India didn't look at banking in terms of inclusive things, but these guys were doing it. So multiple of such strategies really come in, and they are also very, early promoters of something called universal banking. They have an insurance product. They have an agricultural division which is specifically developed to give loans to the agricultural sector. Then uh, they also develop a very interesting scheme which allowed people to invest in shares, which was an early model of the UTI, because this scheme came in 1960s. Over a period, they realized that people would want to invest apart from deposits. So Syndicate Bank became kind of a custodian. People would give Syndicate Bank money, and Syndicate Bank would invest in shares of these companies. And Reserve Bank of India was also not very comfortable with Syndicate Bank doing these things. So it's a very interesting story of thinking through the inclusive banking, and thinking through all these financial products, and how do you make the bank grow over a period of time.
Wow, that really is something. So the PIEs and Syndicate Bank were the true, the flag bearers of inclusive banking, way back in the 1950s and 60s. Great. So
Right.
how would you compare the banks of South Canara, Syndicate, and others with other banking business opportunities, communities, in neighboring southern regions, be it the Tanjore Karur region, Kochi, Malabar region, Coimbatore, or even the Madras headquartered,
Right.
banks?
Right. So, that's also very fascinating. That's the third bit in my book. So what Dr. Thingalaya also leaves us with is this question that, apart from South Canara, which had 22 banks, Coimbatore had some 30, 40 odd banks. Then the regions of Kerala, which we understand Kerala, but at that time it was Travancore, Cochin, Malabar, three regions. And so all these regions had banks, and they were also very similar to South Canara in terms of geography. I mean, especially these Kerala-based banks. So one question which comes up is that, why is it that only banks in South Canara succeeded?
Hmm.
So you are comparing them with the Bombay-based banks, and you realize that South Canara banks were doing inclusive banking. But at the same time, when you are looking at some of these Kerala-based banks,
Right.
or you're looking at the Coimbatore-based banks, they are also operating, as you rightly said, they were basically nidhis and chit funds, which gradually became banks. So when you compare the two, what you realize is that typically all these banks start similarly. The South Canara banks and the Coimbatore-based banks the uh, and the Kerala-based banks. But the South Canara-based banks are very open to learning, and banking is something which you have to learn, and you have to understand that the period at when you set up these banks is very different from when Reserve Bank of India comes in, and Reserve Bank of India is trying to get in. Apart from these frictions between the Reserve Bank of India and Syndicate Bank is also realizing that Reserve Bank of India has valid points to make about the way you have to do banking, which means that you've got to raise capital, you've got to make sure that your profits are not just distributed to the shareholders, but they are brought back as reserves. So
Right.
there's this policy Reserve Bank is trying to do, that you've got to raise your reserves equal to your capital,
Hmm.
and then your sort of loan policies have to be prudent, and they have to. So Reserve Bank of India is getting all these policies, and Syndicate Bank guys are reading these policies and are trying to work on these policies. Similarly with Canara Bank, similarly with Corporation Bank, and other entities which are coming up here. But when you look at the Kerala-based banks or the Coimbatore-based banks, even though they change their names from nidhis to some bank or chit funds to some bank, their banking operations remains very tiny. They are not raising capital. They want to be just local. There is no ambition to really grow, and most of them continue to run chit funds and so on and so forth, but not really looking at modern deposits and the
Hmm.
modern ways of doing banking, doing branch expansion, uh, and so on. So what really happens is that Kerala sees two major bank failures in 1930s, the Travancore National Colon Bank and
Hmm.
1960 Palais Central Bank. And
Hmm.
these two bank failures, because of the very tiny nature of these Kerala-based banks, and also their strategies not really evolving with time, they all sort of fail. And there is a large scale bank failure in Kerala, and Reserve Bank of India is caught into these two failures, and it then pushes them into merging and liquidations and so on and so forth, which also leads to changes in Reserve Bank's policy of
Right.
managing banks. So today, whenever any of these banks are failing, so these policies the Reserve Bank is doing in terms of finding a liquidator, sorry,
Buyer.
finding somebody who's going to merge the bank with you, a weak bank with a. These are all policies which come up after the Kerala-based bank failures. But the South Canara banks have already evolved by then. I mean, they have demonstrated that they are really very good. And apart from merging the 17 banks which close in South Canara, they are also very aggressively merging other banks. And Reserve Bank of India is very comfortable letting the South Canara banks merge some of these banks in the Karur region, or in the Kerala region, and so on and so forth. So South Canara banks, not just they don't remain local, they are very open-minded. They understand that, okay, even if we are doing inclusive banking and our banking strategies are different, we have to grow.
Right.
Only if we grow, and there are ways to grow. One is that you sort of set up these branches, and another is to uh, you know go around merging all these entities. So it's a very interesting strategies differences, that even though your inclusive banking is different from the Bombay-based banks, but your aspirations are like the Bombay-based banks. You want to be like that,
Right.
right? You want to grow, and you want to be like the Calcutta-based banks. You want to be like the Madras-based banks, and that's the reason why you grow large. You are always looking at growth opportunities, even though you are trying to be inclusive.
Right. Really fascinating stuff, Amol. So I'm afraid we are coming to the end of the show. So one last question before we close the conversation on this very intriguing subject. Could you also, how can we miss? Could you also talk about some of the eminent bankers that the South Canara region has given us over the decades, starting with Mr. TMFI?
Right. Yes, obviously there's KV Kamath. KV Kamath, his name is Kundapura Vaman Kamath. And
Right.
all these years, when I would read his full name, I would wonder that, what is the name, what is the significance of this name. Now I kind of understand. Uh, and then, we've had a lot of, I won't really remember the names, but the banks who formed, I mean, so for instance, the Canara Bank was formed by another PI, Then the Corporation Bank was set up by the Hajis, by one of the Muslims, and then it was taken by God's Brahmins because he didn't have anybody to take care once he passed away. The Vijaya Bank was set up by the Bunts, Mr. Shetty, who set up this bank, who was a prominent politician and a legislator at that time. And then we've seen, hordes of these bankers which have emerged, which have these surnames, Kini, Shinoy, Kamath, and so on and so forth. And uh, what is kind of very interesting is that when I was doing my research and I was traveling to this region and trying to interview some of these bankers, then they would tell me very proudly that all of us in this region have either have had somebody working for these banks or we have benefit from these banks in terms of the financial help. So there is a big legacy these banks have left behind uh, uh, in terms of the kind of workforce they created, because they recruited mainly locally, and these knowledge was transmitted from one family to the other. So as a result, it is very common today to whenever you see any of these surnames uh, that they are in financial industry, and they do really well because that family information has kind of passed on, the community information is passed on. And it's not just the banks. I mean, even there are a lot of cooperative banks. There's a uh, uh, North Canara God Saswat Brahmin Bank, which is a cooperative bank. Then there is the Shamrao Vittal Bank. They're all sort of set up by. Uh, so it's this banking legacy of these bankers.
Right.
Without really getting into the names, I think it's a much wider thing, which I think IG Patel. I would just want to end with that. IG Patel has this very interesting quote. I mean, he gives a speech in 1980 where he says that the South Canara region, stands up for whatever we wanted to do in banking, and he wants to pay tribute to all these bankers and these communities which have shaped these banks. And I would just like to echo the words of IG Patel, Dr. IG Patel. I mean, it's quite a story. I mean, it's very very sad that we don't know enough about the region in terms of its banking
Right.
contribution, which has been my efforts to in this book to document.
But yeah, absolutely fantastic. Yeah, it was wonderful chatting with you on the show and getting your fabulous insights on the history of private banks in South Canara region. Banking and history enthusiasts can order a physical copy of this excellent book from Amazon.in or the ebook from vividlibby.com. Thank you, Amol. Thank you so much for your time and for gracing the Banker Se Charcha chat today.
Thank you so much, Ashish. Thank you so much for having me. Means a lot.
Great. That'll be all for today, folks. Keep watching and do subscribe for more insights into fascinating world of banking, finance, and economy. I'm Ashish Kapoor signing off on Banker Se Charcha. Until next time, namaskar. Thank you. Jai Hind.
Jai Hind.